In this lesson, we're going to learn about the new balance sheet. It's called a classified balance sheet. And I suppose the first question we have to address is, why are we changing it at all? Well, if you've done exercise 13, you should have realized that unless, you're really clever and you perceive the issue, you couldn't get it to balance. And that's because, as you recall, in this lesson, we've split apart equity into a whole different bunch of categories so that we can actually track and monitor a business. Like, you can't just make all of your revenue and all of your expense accounts of all different types just all charged to one account. You wouldn't be able to track or monitor anything or make any sense of a balance sheet. So the balance sheet you've learned up to this point was actually just a teaching tool. What we are going to do and cover in this lesson, by the end of it, you should be able to understand or explain these things. One, why are we changing it? Well, I just told you. We need to be able to convey more information in our balance sheet about our financial position. And the second part of this reason to change is the mere fact that because of the way we've done this is we've created all these new accounts that measure performance that go in the income statement. Without them, we now will not balance. The balance sheet won't balance. So the second thing we're going to go through is how to actually make one. And then 3, we're quickly going to summarize what it now tells us and how it does it in a much better way. So the first thing that's changing then is, instead of a left-right, almost like an equation balance sheet where all the assets are here on the left and the liabilities and equity are on the right, we're going to make it vertical. And again, this what it's called a classified balance sheet. This classified balance sheet still has an asset section and now a liability section and its own equity section separate. But we break these apart to be even more specific and clear. So we now have a short-term and a long-term asset section, which specifically is called current assets and fixed assets. And that it can have a bunch of different names, like property, plant, and equipment, capital assets, long-term or non-current assets. We're going to use fixed assets in this course for the most part. And then also under liabilities, you've got short-term liabilities, which we're probably going to call current liabilities most often, and long-term liabilities. And then you have a whole sort of setup under equity to show current capital plus all the changes resulting from our revenues and our expenses and drawings. Okay, so let's make one. Here's a standard service business. The rest is the same. In fact, most of it's the same. It's just more organization that has changed. It's a balance sheet. You put the date, unless you want to muck around with dollar signs at the top of columns and stuff like that. You just say all values are in dollars or all values are in millions of Canadian dollars or whatever you want to say. If you need to review ordering, and you probably do, it looks like this, that there's a certain way to order. This is the general order, but within categories, they break apart into short-term and long-term assets. And short-term assets are ordered by liquidity, et cetera, et cetera. So have this handy basically all semester. So you're going to need that probably to do this. And I've taken the liberties, you can see here, to sort of color code because, sometimes I pull nasty stuff and just scramble all of these accounts up, and you got to figure out which ones belong in which sort of family, and then or sort them out from there as well. So I've colored green for our debits. I've colored our assets green and our liabilities blue. Revenues sort of pinkish red in the background, and then and in the black our expenses. And what we're going to do is build our classified balance sheet from this information. That'll speed things up a little bit for us making the video. So obviously the first thing we have to list is cash, but before that we need to pick the whole sort of left side of the equation, a name for it. And there's what better name is than assets, right? So we're gonna call it assets. And remember, now we don't just start. We have a subcategory under assets called current assets. And I got too excited. Current assets, there we go. Remember, it would look kind of weird to have both of these bolded. You can if you want, but the real goal is you need to make titles and subtitles look different from regular account names. So next, we've got 3 short-term assets from the look of it, right? We got supplies, cash, and accounts receivable. Those are pretty standard ones. And by now in the course, at least I hope, you should know the order. So we go cash, accounts receivable, and supplies would be the typical order. Assuming all things are going as per normal. You have 3 current assets, so you have to total them, right? So we'll go total current assets. And again, that's a subtotal, so I'm going to make it italicized. You also now need to put in the values. So cash was $20,900, accounts receivable $11,324, and supplies, etc., etc., etc. once you get this far, you need to total them. But I'm going to leave that until the very end. Leave a space. Next, fixed assets. Again, that's a title. I'm going to make it look like that. So we have 3 of those as well, right? So we got land, we got building, and we got equipment. So it should go in that order: land, building, equipment. So we're going to type land, building, equipment. Next, this is the end, and there's more than one, so we need to total it. So total fixed assets, there it is down there. And again, it's a subtotal, so I'm going to italicize it. So we're going to leave a space again, because now we're done the asset side. We've done short term and long term, so we need to put a total, a grand total for assets. There it is, total assets. And that's a pretty big one, so I'm going to bold it. I'm going to leave a space for now the other half of the equation, and this is liabilities and equity. There it is. So this is the other side. So this is equivalent to the assets half. So this is the other half. And again, it starts with another subtitle: current or short-term liabilities. Now, in the blue, this is longer term, this is longer term, unless you have other info. So you only have one. So accounts payable is going to be our short term, our one and only. So we don't need to total it because there's only one. So we leave a space and we go on to long-term liabilities. Next, in standard order, it would be bank loan, and then it would be mortgage payable. There's 2, so you have to total. Next, leave a space. And before we go into activate, let's put in some values really quick, and that's pretty much my nummy monkey business. So we're just gonna skip ahead and go poof. There's our values. Next section, last section, is equity, and that's a section. So again, I'm gonna make it look different. However, so this is what's different. If you recall, when we look at our capital account, we no longer have our current value of equity in the business, right? Because we broke it apart. So if you actually want to know true value, true equity right now at this very moment in time, you have to take the capital account. You have to add in any new investment, minus any drawings, add in your revenue, take out your expenses. So this section reflects that and makes a lot of it visible so that you can sort of see the big picture. If you want specifics on revenue and expense, you have to go to the income statement though, right? So you start here with owner capital. That capital account has the beginning capital. So I'm just going to write beginning capital, and I'm going to put that value, 147,250. Then this is different than net income. To find net income, we have to find the difference in these accounts. So we're going to go add, and it's quite clear from just my eyeballing it that it's going to be net income. So I'm going to go add net income. I'm going to take their major revenue, fees earned, and we're going to add this miscellaneous revenue, and then we're going to subtract the sum of all of these expenses, and that's going to give us our net income for the period. Then we're going to subtract, so we go less drawings, and will almost always be a less, so we're going to go subtract this value, drawings of 35,800, and that, when we add it all together, will be current capital. So we're going to go ending capital, which means current capital, and it's going to be the total of all of these values, right? The additions, the positive numbers minus the negative number, and that should be our equity right now. So we leave a space again, and we go total. This would be the grand total liabilities and equity. So this is the right side of the equation. So we're going to bold it just like we did for total assets, the other side. And this is going to be, if we did this right, our current liabilities plus the rest of our liabilities, the long-term ones, plus our total current equity should equal our total assets. And it does. So we're done. So the only thing left to do is put in our lines that indicate where we're adding. So we need a single line here, right, to indicate that these are being added together, and that's the total. We need another one here. Not there. We need one here. Right? We also need one above total assets, because we're going to take this total current assets and this total fixed assets and add them together. So we're going to need one above here as well. That's more like it. We don't need anything here because there's only one item. But for short term, long-term liabilities, there's 2. So we're going to total those 2 up to equal that one. And then there's 3 here that are being added together to give that one. So we need a single value here as well. And then likewise, here we're going to add up these 3, this one, and this one, to get a value here. So you need a single line above it. And so that leaves us with our double underlines, our final totals. And we only have 2, the left side of the equation and the right side of the equation, which I somehow deleted. Where'd that go? So this plus this plus this. Okay. So double underline, which you can now do in Google Sheets. You just need to go to the line type and doubles down at the bottom, and then click the bottom. There's our double underline, and we'll just quickly copy format and do it again, and we're finished. And that is a balance sheet. So the only thing left to talk about then is what it tells you. And simply, it sort of tells you the same stuff, right, as the other one, except it's a lot clearer. It's much easier to spot. So for instance, you can quickly see, again, the ordering of assets still tells you the same type of information as it did in a simple balance sheet. But in this classified balance sheet, it's much quicker, much easier to spot, say, current assets and compare them with your current liabilities. And again, if you have more than one here, it'll be totaled. Also, you can compare total debt or total assets to total debt, long-term debt at least, right? You can also compare the size of income to the size of the owner's drawings and see if those are out of whack or not, right? Profit versus how much the owner's taking out. There's a whole bunch of information that is much more, especially once you start to do financial analysis, ratios and calculations, it's a lot easier to spot and take totals together to come up with those values. And as we start to add more accounts and new types of information, it's going to be a lot easier to then use that information when you're looking at the balance sheet, because it's going to be properly organized and classified and totaled.